Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro.
Hello, fellow investors. Welcome to Seven Bulls, a WeGrow affiliate. Today we're going back in time to explore the economic signs that foreshadowed the Great Depression. We'll also be looking at the strange mix of prosperity and unease that gripped America in the Roaring Twenties, a time period with chilling parallels to our own. Before we move on, if you find any value in today's video, make sure to give it a like and share. It helps us get into the algorithm. Thank you. Now let's get into it. The 1920s were a period of booming economic growth. World War I was over, new technologies were emerging, and the stock market was soaring. It seemed like everyone was getting rich quickly. Flappers danced the Charleston, jazz filled the air, and consumerism was on the rise. But beneath the glitz and glamour, cracks were beginning to show. Here are some key signs that trouble was brewing. Starting with the soaring stock market. Stock prices were rising at an unsustainable rate, fueled by speculation and easy credit. This bubble was bound to burst. Unequal distribution of wealth made the economic gains of the era concentrated among the wealthy, while wages for average workers stagnated. This created a ticking time bomb for consumer spending. Easy credit led to a surge in consumer debt. People were buying things they couldn't afford, relying on future prosperity to pay it back. Overproduction and deflation came about due to factories churning out more goods than people could buy, leading to a drop in prices. This discouraged businesses from investing and hiring, further weakening the economy. Banks were heavily invested in the stock market and made risky loans. When the crash came, the banking system would be exposed. Now, the era wasn't all bad. There were technological advancements, a flourishing of arts and culture, and a newfound sense of liberation. Yet, social unrest simmered beneath the surface, with issues like racial tensions and labor disputes. While history never repeats itself exactly, some of these warning signs echo in our own times. While regulations have been put in place since the 1929 crash, the recent bull market has some economists worried about a potential correction. Also, the gap between the rich and the poor continues to widen, raising concerns about stagnant wages and the ability of the middle class to participate in the economy. Generations burdened by student loans could dampen consumer spending and further hinder economic growth. The interconnectedness of the global economy can magnify economic downturns, just as it did in the 1930s. The Great Depression was a devastating time, but understanding the warning signs can help us avoid similar pitfalls in the future. By learning from history, we can be more vigilant about potential economic bubbles, promote inclusive growth, and strengthen our financial systems. What are your thoughts on these comparisons? Are there other parallels you see between the 1920s and today? If you enjoyed this video, don't forget to like and subscribe for more explorations of history and economics. Until next time, remember to keep up with your financial education. You're the only one in charge of your future. Be safe.
We grew.